All right, welcome to The Explainer. Today we're diving into the story of the 2025 stock market. And let me tell you, it was a year that was anything but predictable. We're talking about a total roller coaster. Record highs, stomach-churning drops, it left even the seasoned pros scratching their heads. And this quote, this one sentence from the Associated Press, just nails it. It perfectly captures the paradox of 2025. Because on one hand, the returns, they were absolutely fantastic.
Just look at this. The S&P 500 index, the cornerstone of so many of our 401ks, it delivered a powerful return of over 18% by early December. I mean, by any measure, that is a fantastic result.
But, and this is a big but, that impressive gain was built on a foundation of some serious anxiety. I mean, just look at this timeline. It's a year defined by whiplash. In April, you've got Liberation Day tariffs triggering the worst single-day plunge since 2020, and then China responds and it drops again. Then, a calm summer rally, everyone's feeling good, driven by AI euphoria and some Fed rate cuts. Fast forward to October, Bitcoin hits a crazy high of 125 grand before, you guessed it, a sharp downturn. And yet somehow, through all that chaos, the market still managed to hit a new all-time high in December. So, what in the world was driving this wild ride? Okay, let's break it down.
So the first big story of 2025, it's all about who was doing the buying and selling. And this isn't just a minor detail. It's a story that signals a real fundamental shift in the balance of power on Wall Street.
Right. So who really moved the markets? We often think it's the giant institutions, right? The hedge funds, the big players. But this year saw the incredible and, frankly, record-breaking rise of the individual investor. People just like you and me.
And what's really wild here is just the sheer scale of this. We're talking about retail investors pouring a record amount of cash in the U.S. stocks. That's 53% more than the previous year. And get this, it's even 14% more than the absolute peak of the 2021 meme stock craze. So no, this wasn't just a trend. This was a tidal wave of cash.
And they weren't just throwing money at anything either. Nope, they were seizing the narrative, as they say, piling into those AI darlings like NVIDIA and Palantir. They were famously buying the dip when the big institutions got skittish about valuations. And they also got into more specific areas, right? Like quantum computing firms, even uranium and metal miners, all while using broad ETFs to just play the whole market.
And this quote from David Russell at TradeStation really hits the nail on the head. He calls it a golden age of retail investing. So here's the crucial takeaway. The rise of the retail trader has fundamentally changed the market's dynamics. With better tools and more access than ever before, regular people are now a major force, and that's challenging all the traditional analysis. It means the market is becoming way more responsive, not just to earnings reports, but to public sentiment, to the power of a really compelling story.
Okay, so while retail traders were this powerful new force, the market was of course still heavily influenced by a very traditional power player, the U.S. Federal Reserve. And let me tell you, for the Fed, 2025 was an incredibly tough year.
You see, the Fed was caught in this classic dilemma, walking a total tightrope. On one side, you had inflation, which was cooling off, but still stubbornly above their 2% target. But on the other side, the job market was starting to look a little weak. And to make this balancing act even harder, they were facing intense political pressure from the White House to cut rates.
And this chart, wow, it perfectly illustrates the internal disagreement happening inside the Fed. You had the doves, folks like John Williams, who were leaning towards cutting rates to help out the job market, but then you had the hawks, like Susan Collins, who were pumping the brakes, urging caution because of that nagging inflation. This public split, this division, it created a ton of uncertainty for investors.
And the job of this committee, the FOMC, was made even harder by a 43-day government shutdown. Think about that. It meant that the key economic data they rely on, all the numbers on jobs and inflation, it was either delayed or completely missing. They were essentially being forced to make some of the year's most important financial decisions completely in the dark.
So you've got this backdrop of new retail power and a Fed that's basically flying blind. The big question is, what actually fueled the market's huge gains? Well, it turns out there were two really powerful engines driving this rally forward.
The dominant story, no surprise here, was the AI frenzy. The Magnificent Seven, those tech heavyweights, they just continued their incredible run, driving a huge part of the year's rally on the promise of artificial intelligence. But that wasn't the only engine of growth.
Because after a pretty long slumber, the market for IPOs, initial public offerings, it just roared back to life. And the return of new companies going public wasn't just about the money they raised. It was a really powerful signal about investor psychology. It basically shouted to the world that confidence was returning and that the market's appetite for risk, especially in the tech sector, was back in a big way.
Okay, so let's recap. We've seen a pretty volatile market get completely reshaped by a surge of retail investors, a conflicted Federal Reserve, and a massive boom in both AI stocks and new IPOs. So, what does this all mean as we look ahead to 2026?
Well, looking ahead, these are the key questions and risks that are probably going to define the coming year. And if you look closely, each one of these brings together all the themes we've just talked about. I mean, will the Fed be able to actually stick the landing? Can AI companies deliver the profits to justify all the hype? Is the consumer, the backbone of the whole economy, going to keep spending? And will those geopolitical shocks, like the tariff scares of 2025, come back to rattle the markets all over again?
And that brings us to our final thought here. If 2025 proved anything, it's that the market's old rules, well, they're changing. They're being rewritten by new players and new technologies. So the big question for every single investor now is this: does this new reality represent a golden opportunity, a chance to build real wealth? Or is it just the beginning of a much more unpredictable and volatile era for all of us?